Okay, so, we're all hearing a ton about the global economic outlook, and honestly, it can be kind of confusing trying to figure out what's really going on right now.
Yeah.
Feels like we're trying to predict the weather months in advance, but there are some pretty important signs popping up.
Yeah, for sure.
And today, we are looking at some potential reports that we share, including some warnings driven from the OECD and some in-depth analysis from Bloomberg. The big thing that ties all of this together, the growing impact of these escalating trade wars, particularly the ones we've seen started by the Trump administration.
Right.
So what we're going to do today is try to go deeper than just the headlines, and really understand the potential risks here.
Right.
Like, what are the ripple effects we might see, and what are the different viewpoints on what's ahead for us?
Yeah, absolutely. I mean, just looking at what you've sent over, the thing that really jumps out at me is this growing consensus that things are going to slow down globally.
Okay.
And I think the big question isn't really if the economy is going to cool off, but how much it's going to slow down. And then, what kind of chain reaction will that set off?
Okay, so let's jump right into it. Starting with the OECD's big picture view. They actually went ahead and lowered their forecast for global growth.
Yeah, that's exactly right.
So what are they saying now?
So their latest projections show global growth dropping from 3.2% in 2024 down to 3.1% in 2025, and then it dips even further to 3% in 2026.
Okay.
Now, these might seem like small changes, at first glance.
Right.
But the fact that they're revising these numbers down, from what they said back in December, really shows that there's growing concern within the OECD. So the important thing to understand here isn't just that the numbers are lower, but that the forces driving growth are changing.
Right.
We might be moving away from an economy that's boosted by trade and into something that's much more uncertain and focused on what's happening within individual countries.
Okay. And it sounds like they're pretty clear on what they think is the main reason behind this downward revision, increasing trade barriers and this kind of overall feeling of uncertainty.
Yeah.
Right.
The OECD is really emphasizing how these rising trade barriers and the uncertainty they create are directly hitting those crucial parts of the economy,
Oh, okay.
like business investment and consumer spending.
Right.
So think about it. When companies are faced with unclear trade rules in the future, and they're worried about potential price increases,
Sure.
they naturally become much more hesitant to invest in growing their business.
Right.
And it's the same for consumers. If we're dealing with higher prices or we're just feeling less secure about where the economy is going, we're going to be a lot more careful with how we spend our money.
So this isn't just some far off, global trend. It's actually predicted to have real effects on individual economies,
Yes.
even the ones that are at the heart of these trade policies. So
Yeah.
let's take the United States, for example.
Right.
They're projecting a slowdown there,
Yeah.
even though the U.S. has been the one, initiating a lot of these trade actions.
That's what's really interesting here. Even the U.S., with its relatively strong economic performance lately, is expected to see things slow down noticeably. The OECD is forecasting growth to moderate to 2.2% in 2025 and then slide further to 1.6% in 2026.
Right.
And these are pretty big downward adjustments from what they were expecting before.
And it looks like our neighbors, Canada and Mexico, are facing even bigger changes in their economic outlook. Canada's growth projections have really taken a hit.
Oh, absolutely. Canada's growth forecast has been slashed to just 0.7% for both 2025 and 2026. That's a massive difference from the 2% growth they were anticipating earlier.
Right.
It really highlights how deeply connected these North American economies are and how shifts in trade policy in one country can have major ripple effects on its neighbors.
Yeah, and the situation for Mexico is honestly pretty worrying. The OECD is actually predicting that their economy will shrink. We're talking about a recession here.
Yeah, the projections for Mexico are pretty stark. They're anticipating a 1.3% economic contraction in 2025 and then another 0.6% contraction in 2026. This is a huge swing from earlier forecasts that had predicted growth for those years.
Right.
The trade relationship with the U.S. is clearly playing a major role here. What this tells us is that these trade policies aren't just abstract numbers.
Right.
They have very real and different impacts on people's lives depending on where they live and the structure of their country's economy.
It's a good point. It's easy to forget about the real people when we're talking about these big economic trends.
Exactly.
Now, shifting our focus to Europe, it seems like the Eurozone isn't escaping these challenges either,
Yeah.
even if they're not directly targeted by all of the U.S. tariffs.
Yeah, if we think about this in the context of the bigger picture of global economic uncertainty, it becomes clear that even economies that aren't directly hit by specific tariffs are going to feel the broader ripple effects. So Germany, for instance, a major global exporter, is now expected to see growth of only 0.4% in 2025, and France is not far behind with projected growth of 0.8%.
Right.
These downward revisions show just how much weaker global demand and increased uncertainty are impacting their economies that really rely on exports.
In Japan, another big player in the global trading system is also facing a lowered growth forecast.
Exactly. Japan's growth forecast has been cut down to 1.1%, which is a 0.4% decrease. This just further demonstrates how widespread the impact of these trade tensions is on major global trading partners, regardless of whether they're directly involved in these specific tariff disputes.
Okay, now here's something interesting. It seems like China's kind of an exception to this overall trend of slowing growth.
Yeah.
Their growth forecast has actually been revised upward slightly. What could be behind this different outlook?
This brings up a really important point about how different economies are able to adapt and respond to these global pressures. The Bloomberg report suggests that specific actions taken by the Chinese government might be helping to cushion the blow from the tariffs.
Interesting.
While their projected growth of 4.8% in 2025 is still lower than what it was before the trade war began, the fact that it's been revised upwards suggests they're showing some resilience.
Okay.
And this could be due to adjustments in their domestic policies or maybe shifts in their trade relationships with other partners.
Okay, so we're seeing a pretty consistent picture of slower growth across most of the major economies.
Yeah.
But the OECD is also pointing to rising inflation as another serious concern that's tied to these trade policies.
Right.
So how exactly are tariffs contributing to these higher prices we're seeing?
What we need to understand here is this thing called the pass-through effect. What that means is that the added cost from tariffs often gets directly tacked onto the price that businesses and eventually consumers pay for imported goods. So when the U.S. slaps a 25% tariff on goods coming from China, Canada, and Mexico, like the OECD has calculated,
Right.
that essentially increases the cost of those goods by 25% right when they're imported.
Yeah.
And even with potential increases on aluminum and steel, the OECD's analysis shows that these price hikes aren't temporary.
Right.
They become built-in costs within the supply chain, and that leads to permanently higher prices for both consumers and businesses.
So this must have a huge impact on how central banks like the U.S. Federal Reserve manage monetary policy.
Oh, absolutely.
They're already trying to fight existing inflation, and these tariffs are basically adding fuel to the fire.
Exactly. The OECD is highlighting that this extra inflationary pressure coming from tariffs will likely force central banks to keep interest rates higher for longer than they would have otherwise.
Right.
So to put it simply, when prices are going up, that's inflation, central banks raise the cost of borrowing money, that's interest rates. This makes it more expensive for businesses to invest and for people to spend money, which can slow down the economy overall. So the goal is to get inflation under control, but the risk is that keeping interest rates high for too long could actually hurt economic activity.
Right.
It could even make the slowdown worse and create problems in financial markets.
So it's a tough situation.
Yeah, it's a real balancing act.
Okay, so now let's look at what the Trump administration is saying about all of this. As outlined in the Bloomberg report, they seem to acknowledge that their trade policies might lead to some economic pain.
Yeah, and that's really important to note. The Bloomberg report quotes former President Trump from an interview he did with Fox News where he talks about completely reshaping the U.S. economy.
Right.
And he says that a difficult transition period might be necessary for This clearly shows that at least he understands that these trade policies could cause short-term economic problems, but he sees them as
Okay, but how's the market reacting to all of this?
Yeah.
The reports mention a pretty significant drop in the S&P 500 index.
Right. So if we think about this in terms of investor confidence, that 10% drop in the S&P 500 since mid-February is a pretty clear sign that the market is uneasy.
Okay.
And the analysts are warning about a potential collapse in investor confidence. That really underscores just how much uncertainty and worry these escalating trade tensions are causing in the financial world. The market doesn't seem to be buying this idea that a difficult transition will automatically lead to that more prosperous future, at least not in the short term or not without a lot of risk.
So beyond just the numbers, what's driving this feeling of unease in the market?
Well, investors are probably worried about a few things combined, like lower corporate earnings because of higher costs and weaker demand, and the broader uncertainty around future trade relations and, the possibility of even more unpredictable policy changes.
It definitely sounds like we need some stability and predictability in the global trade landscape.
Yeah, for sure.
OECD Secretary General Matthias Cormann didn't mince words in his comments to Bloomberg about the potential consequences, did he?
No, he was very straightforward. Corman warned that if these trade tensions keep escalating the way they are, it could have catastrophic effects.
Right.
He even suggested that they might have to lower their economic forecasts even further.
Okay.
His statement really highlights just how high the stakes are and how things could get worse economically if these trade tensions aren't addressed.
He also brought up some other factors that could affect growth, like increased defense spending in Europe.
Yeah.
That's an interesting point. It could boost certain sectors, but it could also be a financial burden on governments.
It really shows how complex the global economic picture is.
Right.
While increased defense spending could stimulate demand in certain industries and potentially create some jobs, it also takes away a lot of financial resources from other important areas like infrastructure, education, or research and development.
Right.
And those things could have different long-term effects on growth. Plus, increased defense spending often means more government debt, which can lead to its own set of economic challenges down the road.
Right.
So it's a trade-off with potentially uncertain consequences in the long run.
We talked about how China seems to be weathering the storm relatively well.
Uh-huh.
But what about Europe's ability to handle these global economic shifts? The report suggests they might be less directly exposed to U.S. tariffs compared to other regions.
Right.
Yet they're still seeing their growth forecasts revised downwards.
This is a really good example of how interconnected the global economy is.
Okay.
Even though Europe may not be the main target of the current U.S. tariffs, the overall climate of global economic uncertainty and the projected slowdown in other major economies like the U.S. are definitely going to affect Europe's growth prospects.
Right.
So those lowered growth expectations for big European economies like Germany and France, even though they're facing fewer direct tariff risks from the U.S., it probably reflects the fact that they're still dealing with things like weak investment, slow export growth in a less certain global environment, and possibly even higher energy costs.
Right.
It shows that even without direct trade barriers, those broader global economic headwinds can still have a big impact on a region's economic performance.
So as we start to piece all of this together, it seems like these sources are painting a fairly consistent picture of the main threats to global economic stability right now.
Yeah, I think the key takeaways from the OECD and Bloomberg reports are pretty aligned. We're looking at a few factors coming together. Slowing global economic growth, rising inflation that's being driven largely by these trade tariffs, and a big increase in overall economic uncertainty, which is making businesses hesitant to invest and is hurting consumer confidence.
And the fact that central banks will likely need to keep interest rates higher to fight inflation could actually make this economic slowdown even worse.
Yeah, that's the difficult situation that central banks are trying to navigate right now.
Right. They're tasked with keeping inflation under control, but if they tighten monetary policy too much in this already fragile environment, it could increase the risk of pushing economies into a recession.
Okay.
And these ongoing trade tensions are making their job even harder.
Yeah, it really sounds like global markets and investors are in uncharted territory here with a lot of unpredictability baked into the overall economic outlook.
Absolutely. The combination of escalating trade tensions, the possibility of more trade policy changes down the road, and the resulting uncertainty is creating an incredibly complex and unpredictable environment for everyone. Businesses, investors, policymakers.
Yeah.
It's a time when traditional economic models and forecasts might not be as reliable, and the potential for surprises is higher than usual.
So as we wrap up this deep dive into the potential fallout from these escalating trade wars, particularly the ones started by the Trump administration,
Yeah.
it leaves us with a big question for you, our listener.
Thinking about all the things we've talked about, the projected slowdown in growth, the rising prices, the different ways this will impact different regions.
Right.
What do you think might be the most surprising long-term consequence of these trade tensions on the global economic landscape? And I want you to think beyond just the immediate forecasts here.
Yeah.
Think about potential ripple effects, shifts in global supply chains, and how interconnected our global economies really are. definitely something to think about as we move forward.
Yeah, it's going to be interesting to see how things play out, that's for sure.
Definitely food for thought. Thanks for joining us for this deep dive, and as always, we appreciate you listening, and we'll be back next time with another fascinating topic.
Yeah, thanks for having me. It was a great discussion.
Always a pleasure. All right, everyone, until next time, stay curious and keep exploring.